Okay, good morning, everyone. Welcome to Finance and Corporate Services. Our agenda is a little bit broken up today. We thought this was the most efficient way to do it, so we are dealing with just the natural gas rates item before we break for some caucus items, and they'll be coming back and dealing with the rest of Finance and Corporate Services at that time. So with that out of the way, let's get underway. Staff's been doing a 5-minute presentation on the natural gas rates.
Good morning, Mr. Chair, committee members. My name is Danny Prasad, and on behalf of Kitchener Utilities, I'm pleased to present to you today the proposed natural gas rates. Overall, this report represents no net change in delivery revenue attributed to Kitchener Utilities costs. It represents a neutral to favorable impact to customers as a result of utility-driven charges. These proposed rates will position the utility at a minimum end of the range for stabilization reserve fund balances, and staff has set the minimum rates possible while still maintaining a small cushion for a high degree of volatility that the gas programs face. Overall, Overall, I'll be happy to address any questions regarding the report at this time.
Thank you. Questions? Councillor Gazzola.
You woke me up. I was waiting for a 5-minute report. That's fine. You mentioned that it was a revenue neutral. Because of this change, what's the bottom line going to be for our customers? It will increase, will it not?
Through the chair, the utility-driven costs do not affect the customer. It's net zero impact.
No, but and you're absolutely right with that. But the bottom line on the bill, what's the bottom line going to be? It's going to be more, is it not?
So the bottom line on the bill is a 10% increase.
Okay, that's what I wanted to hear. Yeah, we can, jump up and down because it's a provincial impact, but the bottom line is 10%. That's fine. And in line with that, I would like to bring an amendment forward at some point. So.
Actually, no one's moved the recommendation, so you could move the recommendation and your amendment all at once.
I'd move the recommendation, but I don't really like it. So
you could also move an alternate motion, I guess. Would be
I wanted to ask staff first, okay?
Okay, sure.
Yeah. I wondered the possibility, I'll ask you, is it possible to, and I'm struggling here because the last statement that I have seen for the gas works was as of March the 31st. Has there been any more up-to-date statements, financial statements for the gas works? It would be nice when we're dealing with this to have some kind of a picture of where we stand at this point in the process. So I'm hoping between now and it doesn't come back to council for 2 weeks. Right?
Yes.
That we could perhaps get an update as to where we stand. What I'm driving at is I would like to see perhaps if there's something we can do with the supply rate, is there something we can do with the delivery rate? The other problem I have is that I got to ask some questions here. What is happening with the transportation costs? They have increased 66% since about a year ago now. What's happening there?
So through the chair, with regards to the transportation program, the price of moving gas from Alberta to Ontario has increased due to higher demand.
Due to higher demand? And that causes our transportation costs to go up?
That's correct. While we don't contract from TransCanada using the long haul from Alberta, most gas that is sourced from Alberta is brought through TransCanada. So that demand drives that price up.
Does Union Gas have the same method of transportation? Because I noticed their transportation costs are only 4 cents a cubic meter, and now we're going to 5 cents.
So In October, Union Gas's rates and our rates are roughly equivalent. In January, Union Gas is slated to do a slight reduction. They have a method of recalculating transportation costs that Kitchener Utilities is currently exploring.
Well, it would be good if we could explore that before we set these rates.
That likely wouldn't work because of the short time frame to do that.
Ms. Fletcher, do you want to comment? No, not covered. Okay, sorry, Councillor Ms. Fletcher, okay, go ahead.
Is there,
Sorry, Councillor Gazzola, Ms. Fletcher, did you want to comment? No? Okay, Councillor Gazzola, please go ahead.
is there any opportunity to reduce perhaps even the delivery charges? If we reduce the delivery charges, our net profit would be somewhat deteriorated and we wouldn't be able to throw as much into the city pot. But is that a possibility that was considered?
Ms. Fletcher.
Through the chair, what I can assure council of is we have a committee of folks, both from Kitchener Utilities and Finance, who review this information on a monthly basis. We do understand that there is an impact to the customer bottom line. We're really here with a good news story from a Kitchener Utilities ratepayer standpoint. I would also suggest that Kitchener Utilities, the utility has exposure from a market standpoint, the volatility in the market, and volatility related to weather. So what staff has done is basically squeezed our rates as much as we can while leaving a small cushion so that we can deal with any volatility, whether it's related to weather or related to the market.
Councillor Gazzola, your time's expired, but if you wouldn't mind, before you bring back in, letting the rest of committee know what your intention is for your motion so we can ask questions appropriately.
Well, my intention was to try to reduce, and I'd like to soften the 10% impact on our taxpayers, on our customers, and therefore I would like to see the possibility of reducing the supply cost component or the transportation component by a little bit, or even the delivery charge component. And then the second thing is that I want to see, I want to move a recommendation that puts a note right on the face of our bills stating what the additional costs are for. Yeah.
Okay, I believe was already approved as part of the cap and trade. Not in this report, but in the previous report. If that's referring to, you're referring to the increase in the cap and trade costs?
Yeah, is it going to be right on our bills? I want right it on the face of the bill.
Okay, that's
not just in our rate description and our communications, and right on the face of the bill.
okay. I think that's. I'm gonna have to talk to staff. I'm not sure if we've dealt with that or not already in terms of. Okay, sorry, Mr. Chapman, do you want to comment first?
Through the chair, we don't have the ability to make that change on the face of the bill, but as I understand it, there will be a number of inserts attached with the bill over the next couple of months to highlight the change.
And that's fine, but if we don't have, why don't we have that opportunity? Why can't we look at something that will allow us to do that?
I think there are two reasons. One, the OEB's direction is that this be included within the delivery rate. We're following that direction. And the other is that if we were inclined not to follow that direction and separate out the charge, that would require a substantial reprogramming of the system and could not be done for January the 1st.
No, and I appreciate what the OEB is saying and how lack of transparency is, that they want it included there. Fine, I'm not arguing you have to include it there, but I still believe I would like to see a note right on the face of I brought my bill here. There's lots of room there to put, and I've come up with a short note to start with that I believe we should have the right to do that, and I haven't seen where it's, I know the OEB and the Premier has stated that it should be that it's part of the natural cost of the same as, no different than delivery and other costs, but it's a tax.
So we can explore and report back to council if what you're getting at is simply a note on the face of the bill that highlights that this charge is included in the delivery rate. We can explore that and report back at council. I just want to respond to the other question around updated actuals. The August variance report is being finalized and will be in the package for Committee of the Whole when this comes forward again. The last issue I wanted to speak to is about the implication of a reduction in the rates. Right now, all of the rates are set essentially so that we achieve the minimum stabilization target across the enterprise. So in that sense, really, these costs all of our costs are flowing through to the customer. I think council will have to deal with a philosophical question, that is whether or not the corporation wants to take a hit for this provincial tax. And the implication will be, as you'll see, really an impact to our capital program. The dividend largely funds our capital budget. If you're inclined to essentially subsidize this provincial tax, it will require a reduction in city capital spending to mitigate that hit.
Thank you, and I appreciate that, and that's exactly what would occur. And I'm not taking anything away from staff. I'm sure you've looked at every possibility, but I believe that that's a discussion that council should have. Are we prepared to take some kind of a hit? And I realize that it will affect our capital.
Okay. Thank you, Councillor Zoll. You can cue back in. Councillor Yaneski.
Yeah, thank you. Question to Mr. Persaud. In terms of your presentation and your little introduction on this report, you indicated two phrases that caught my eye. You mentioned revenue neutral. Is that correct?
That's correct.
And then, but when questioned by Councillor Gazzola, there'll be a 10% increase as the bottom line.
So what I meant by revenue neutral was that it's revenue neutral to Kitchener Utilities changes.
The 10% is the provincial cap and trade.
So basically, this 10% is what the cap and trade is being passed on.
That's correct.
Okay, but everything else that we have in terms of our expenses, in terms of the billing, is the same, no change.
That's correct. Overall, on the bill is no change.
Until Councillor Gazzola's intent to maybe reduce it, however that unfolds. Okay, I need that. Okay, perfect. Thank you.
Councillor Singh.
Yeah, thank you. I was looking for clarification when I had said rung in, but Mr. Chapman, I think, thoroughly explained the limitations of having that extra information on the bills. But I'm glad to hear that there is an avenue that we could possibly explore further. So I encourage that process. Question to Mr. Prasad. So accounting for transportation and the increase, little kind of confused on your explanation. If you can be a little bit more thorough, saying that there's a recalculation that can be done. How would that reduce it? And if that is the case, why haven't we looked at avenue ourselves well in advance, especially knowing that a different utility peer within the industry is doing that already, that better accounts for it, I guess. So if you can illuminate a little bit more on that.
Through the chair, what this new methodology does, it does not guarantee a reduction in transportation. Because of more and more gas being sourced from the south, which is the Marcellus and Attica regions, and not as much sourced from Western Canada, Union Gas has looked at changing their reference price to, instead of referencing the Alberta reference price, they would reference an Ontario reference price. This would essentially collapse their supply and transportation programs. So we haven't looked into that further.
Again, the details of it seem very complex, and for a layman to comprehend as quickly, there is a limitation on our part. So simply what you're saying, it's not necessarily a good way that Union Gas is already calculating the transportation. We are looking at it, but not necessarily they're doing it something that is going to be advantageous to their bottom line. Is that
what
correct?
I'm saying is Kitchener Utilities is is different than Union Gas. We have unique opportunities and unique differences. Staff just hasn't had the opportunity to explore in detail if this is the best path for Kitchener Utilities.
How long will that take?
We're expecting it to take a few months, and we'll be back in 2017.
So even though in the beginning of 2017 that this would be the new increase, if there is an adjustment and we go with that avenue as Union Gas is doing for their calculation for the transportation rate, could we see a reduction down the road then? When would the reduction be calculated in or phased in? If that is the avenue that we go.
It's very difficult to say if there will be a reduction and when the reduction will take place.
Okay, so there's just a lot of uncertainty. Okay, the other question I had is the 10% increase. Again, I want to focus on that this is a good news story on our side for the business that we manage, that is a net neutral increase, so that's not increase to or burden on our ratepayers. But the 10% increase is really the cap and trade program. So that 10% increase, does that account for the 5% that's for the local management, and 95% is again passed through to the province? Does that 10% include that 5%, or
Yes.
there was a deferral that we had dealt with as well?
That we're dealing with also today.
Oh, okay, that's part of today. Okay.
Yeah, I'd like to direct everyone's attention on that point. There's the extra sheet in front of us that I believe we're supposed to deal with during this committee, the deferral.
To answer your question, that 10% is inclusive of all charges for cap and trade.
So if we decide to put that aspect on hold, if that's the will of the committee for that 5% local management, what would the effect be? It's 10% to an average ratepayer right now. What would that effect be if that 5% of that cap and trade program was not accounted for?
It will be 5% of the 10%. It will be a very small amount.
9 point. Okay, sorry.
Okay.
Mr. Chapman?
Through the chair, in effect it would be less than that though, because we moved cost from delivery to cap and trade. Those are existing costs, so there is in fact a small decline in the delivery rate that's been moved into cap and trade. Those costs would simply move back into the delivery rate and there would be a small increase. So our rates are in fact going down slightly. We're calling it net neutral because those are costs that are being moved from delivery into cap and trade.
So essentially there wouldn't be any difference then?
Really, I think the only difference that exists is largely that $20,000 capital cost that's referenced in the staff report that has a minuscule impact on the rate overall.
Okay, that's good clarification. Thank you.
Okay. Mayor Verbenovich?
Thank you very much. I guess just a couple points, and as I understand it, this recommendation's been moved already?
Councillor Gazzola has indicated he's going to move a recommendation, and actually on that point, Councillor Gazzola, if you're making significant changes, could you please write it out so we understand what your suggestions are in the interim? But Councillor Gazzola has indicated that he wasn't specific on where, but he indicated he was going to ask staff to look at areas of reduction in any of the items that they can.
Okay, well, I guess it's difficult to comment on it until we hear what the motion is, so
Okay. Well, we're still sort of in questions, actually.
Okay.
So, yeah.
So then my question will be, Mr. Chapman, you indicated that staff will go back and look at the issue of messaging on the bill, which is fine. I guess my concern is historically we have not been subject to the OEB in the same ways that Ontario, that Union Gas and others have been, but we've generally followed all of those same guidelines. Is that correct?
Mr. Chapman?
Through the chair, that's correct. And in fact, in specific cases, we have been subject to OEB direction. They do not direct our rate setting. But for example, through deregulation and the gas distribution access rule, we were subject to those regulations.
But generally speaking, we've followed those rules because it's been in effect a gentle person's agreement between the municipality and the province to do that. And the risk that we run if we start running too astray is that we will lose our tax-free exemption that we have for the utility. Is that correct?
That's correct, and the key principle there is cross-subsidization, and so we need to be very careful that we do not move some aspects of the business to cross-subsidize other aspects.
Okay, so I'll have some comments on that part of it later. I guess the other piece then that I would ask is, if we do start cross-subsidizing, as has been suggested, there might be a proposal coming forward. What would the impact be of that on our capital program, and what message does that send to other orders of government in terms of the need that we either do have or don't have in terms of infrastructure dollars?
Mr. Chapman? I think that second
Maybe
question
the second part's
is a little political, but I guess the first question was, what would the impact be? Like, we don't actually know the figures, but I think you stated it already, but just if you wanted to reiterate, if it was subsidized, where would those dollars come from?
It would come from one of two places. The dividend currently goes to fund our capital pool, so essentially our tax-supported capital program, so it would be a reduction across the 10-year forecast for that program, or it would be an operating budget increase because the other portion of the gas dividend goes to the tax-supported operating budget.
So if you say it would take away money from our tax-supported capital pool, then the option would be to either cut the capital budget and not address issues that we need to address, or put an additional burden on the ratepayer through taxes, as opposed to through the gas utility. Is that correct?
If the dividend is reduced, yes, that's correct.
Okay, thank you.
Councillor Galloway-Selak?
Yeah, a couple questions. More to do just with regards to the cap and trade section on the report. It's saying that the minimum auction price is going to be $18.09. If that comes in under, I know because it's a projection, right? It's a guess at this point. If that comes in under, are we able to relook at the rates and what we're charging for the cap and trade in the first or second quarter?
So, through the chair, first of all, we don't believe that it will come in under the $18 floor price. That's been a prescribed price by the Ministry of Environment. The risk is that price could increase. Because we don't set our rates quarterly, because we focus on rate stability, we wouldn't be able to change that rate until the next rate cycle.
So if there was, understanding what you just said, that it's not likely to come in under, is that something that we could direct to look at a different rate if it does come in under? I understand that it's not likely, period. Because my flip side of the question then is, if it comes in significantly over the $18, we are going to be subsidizing that cost, right? Because we're not going to be increasing the charge either. Is that correct?
That's correct. That would be a reason for the stabilization reserve to mitigate that.
Right.
Mr. Chapman?
Through the chair, I think we've already taken that direction. That really is the purpose of the first motion that was passed previously at committee around the implementation strategy. So we'll time that so that it's after the auction, likely in the second quarter of next year, and can report back on what cost we incurred and what that means for the rate. So
there is a chance that rates may increase at some point next year because of that auction price?
The benefit we have is that there is I believe, a 3-year compliance period within which we need to meet our obligations, and so Council could decide based on that variance to either adjust rates midterm or wait until the second year, because you have that window of time within which to comply.
Right, and I don't know, Mr. Chair, if I should ask questions now with regards to the other motion, or if you're dealing with that completely separately, because I was just going to ask again about the impact and the importance of the reserve fund. Is that now in the context of it all, or do you want to save those questions for later?
I think they are. I think they're combined to the point that perhaps you should deal with them all at once. But on that point, I'll pause your time. This was deferred to get comments back from staff on the setting up of the reserve and the implications. So I think if
that's really what my question.
Oh, okay, yeah.
Really
so if staff just wanted to comment on the implications of that,
I just don't want to lose sight of that in the whole grand scheme of things.
Ms. Fletcher.
So through the chair, it is still staff's recommendation to manage our cap and trade impact as a self-contained program. And I know Council was seeking clarity on the reason and rationale for the stabilization reserve, and you were also potentially looking for the perspective of our financial staff. So Mr. Prasad can give you an update. We've actually received additional information since our discussion 2 weeks ago, so he can give you an update on the requirements of the program. And I might look to Mr. Chapman just to give a perspective of finance staff for the reason and rationale for the stabilization reserve.
Okay. Thank you, Mr. Prasad.
Through the chair, last week, the Ontario Energy Board has released their final framework, and it outlines the use of deferral and variance accounts to facilitate the cap and trade program. The OEB believes that deferral account balances should be apportioned between the customer-related and facility-related obligations. And currently, that would meet our requirements for having stabilization balances for operating and capital individually.
Okay, appreciate that. And Mr. Chapman?
Through the chair, I don't have much to add. Originally, we were recommending this approach because we thought it was good practice. I think it's become clear now that it's required practice, so there is no other option.
Okay, clear on that.
I'm
Councillor
good.
Gallo-Silac?
Yeah, no, I'm good.
You're good? Okay. Councillor Fernandez?
I just have a couple of questions of clarification because I'm really finding it hard to understand the whole way we're going here. When I just heard what Mr. Prasad said was deferral and variance accounts, can you just elaborate on that a little bit more? Like, I'm not completely clear on that.
Through the chair, the variance accounts are equivalent to our stabilization accounts that Kitchener Utilities uses. In terms of the rate-regulated utilities, a deferral account is basically where they keep extra collected money that they refund annually to customers.
Okay, so they're just using different wording than what we use.
That's correct.
So they're suggesting that in our case, the municipality or Kitchener Utilities have some kind of a fund to offset the cap and trade cost, or to...
It's not necessarily to offset cap and trade costs, it's to mitigate rate shock.
Okay, all right. How is Union Gas dealing with this?
Union Gas will have to follow the Ontario Energy Board practice prescribed framework and report back to the OEB. So very similar.
Okay, so they're going to have to put forward an increase to their customers at the same cost as we do, like the $75 cost, or the 10% increase?
So
that is?
Union Gas is able to set their rates quarterly. So they have selected an auction floor price that is different than Kitchener Utilities. Because Kitchener Utilities sets rates annually because of rate stability, we've selected a more conservative price based on the ministry's consultants. So at the end of the quarterly cycle, Union Gas can go back to the OEB to increase their rates accordingly.
Okay. But we would not be able to do that because we set ours annually.
Correct.
Would we be able, but annually, could we decrease our rates?
That's true.
Okay. I heard the word cross-subsidization. Can I have a little bit further explanation on what that means?
I'll jump in just quickly. I think that was in reference to the motion that Councillor Gazzola is planning to bring forward. And the concern is if Councillor Gazzola wants to reduce the gas rates below what's recommended, either we have to reduce the spending in our capital program over the next 10 years, or we have to raise taxation to cover that cost. So that would be the cross-subsidization, where taxes would end up offsetting the increased cost in the gas utility as a result of the provincial increase.
Okay, but we don't even know yet how much that would mean. I mean, I feel that we're dealing with a lot of uncertainty at this point in time, and if we're talking about cross-subsidization, so in other words, my understanding is that if we reduce the cap and trade rate, the 10% hit to the customer, that we may have to take money out of our capital gas reserves, which would be work that we would be doing on roadworks or that kind of project. Is that correct?
That's correct. Mr. Chapman?
Through the chair, just a finer point on that. There are two separate issues here. The cross-subsidization is mostly concerned between the operations of the gas utility. We can never be seen to be abusing the monopoly that we hold locally for gas delivery. We're the default supplier for gas, so if someone does not buy through a gas marketer, they buy through the city, and so we need to ensure that we simply flow through the cost for gas supply based on what we incur. So we can never be seen to be playing games between the various segments of the gas operation to increase rates or reduce rates in one area to support the other. Certainly, Council could always choose to reduce the dividend it pays from the gas utility. It's never happened in my history here, and the implication of that would be either a property tax increase or a reduction to the capital program. I would say that's more a political decision, but it would have implications on the tax-supported operating budget.
If we had a better understanding of what that could be, so you're talking, if we were to say we were to reduce the dividend and that was to come out of our capital works projects. I mean, right now, I think I feel that we don't have a complete understanding of what that might be at this point in time. Is that a reasonable understanding or not?
Well, all I would point out is that the current dividend transfer to the city is about $14 million a year. The cost of the cap and trade program is about $10 million a year. So if you were looking to offset the cost of cap and trade, you would essentially wipe out the entire dividend, the majority of the dividend that's paid to the city currently. On a cumulative basis, that would take $100 million out of the capital program if that full impact were realized.
But if we weren't, and I realize my time is up, so maybe I'll ask that question after. Okay.
Thank you. Councillor Marsh?
Thank you, Chair Davey. Just was wondering, in your in staff's communication with the OEB, is there indication that we as a municipality-owned utility are being treated differently in any way than the private sector?
Mr. Purcell? Ms. Fletcher, do you want to take that?
Sorry? It's okay.
Okay, Mr. Prasad.
Through the chair, in our dealings with the Ontario Energy Board, all natural gas utilities in Ontario, including ourselves and Kingston Utilities, are being treated the same.
But I know that in other ways we are not. And so as this whole cap and trade program gets rolled out, do you anticipate potentially that we will be having different rules than the private sector, such as the OEB sets how often the private sector can buy the gas that they purchase, whereas we are not subject to the same as a publicly publicly owned utility. We're not. So that's one difference. I'm just wondering if the cap and trade, if you have any indication that down the road things will be different for us.
Ms. Fletcher?
Through the chair, we do not have that indication. It's always been our practice to align ourselves with our industry partners and follow the guidelines of the OEB. When we're talking about rate setting, I think that's what you were referring to. Kitchener Utilities did a pretty extensive customer survey about a year and a half ago, and what we heard very strongly from our ratepayers was they really valued an annual rate change as opposed to more often. Oh. So it's not prescribed by the OEB. We have valued rate stability because our customers value rate stability.
That's really interesting to hear. So I don't remember seeing the report of that, like the summary of that study. So my apologies if we've already seen it, but would you mind sending us a summary of, just so that we have that at top of mind when residents come to us and say, hey, why wouldn't you change the rates quarterly like the private sector?
Through the chair, we can do that.
Thank you. And then, okay, well that maybe makes my other question a moot point, but I just want to understand, are we obligated by anybody, by the OEB or by any of our official policies to only change our rates annually, other than the will of the the ratepayer?
No, we're not
Okay.
obligated.
Okay, thank you.
Councillor Ioannidis.
Thank you, Chair Davey. I guess my question is basically, if we don't implement these change of rates, we're basically going to take a hit. Okay. And if there's any reduction from that 10%, let's say 8%, what kind of numbers are we looking at?
Mr. Chapman? It seems like every percent is $1 million.
That's my calculation. So if it were reduced, it would be a $2 million impact, which would either, if it was all on the tax levy, equate to a 2% tax levy increase, or in capital, that would be $20 million across the 10-year capital program.
Okay, and capital would be $20 million over a 10-year.
Correct.
So in equivalent, so if we were to reduce it by 2%, we'd be basically reducing one project per year, roughly, if it's a $2 million road reconstruction?
And they aren't funded from this program. It would more likely be a recreation or culture facility. They're the ones that tend to receive the investments. So it would likely be one of the major facilities in the capital program.
Okay, so that capital program would be used to maintain those facilities to their optimal usage?
To maintain them or to fund the non-gross share of new construction, yes.
Okay. And so, in relative terms to the taxpayer, if we were to cut that program and do it to the tax base, so really roughly it'd be every 1% would be about a 1% tax increase if we were to put towards the tax base.
Yes.
Okay. Thank you.
Thank you. Before I get into the second round here, I'd have two, it's relatively simple questions, I think. The first is, to be 100% clear, if we approve the recommendation as it was written before us, our rates are not changing from how they currently are. Is that correct? And sorry, the bottom line isn't changing except if you take cap and trade out of the equation.
If you take cap and trade out of the equation, there is a net zero change to the M1 residential and supply and transportation.
Thank you. And our rates in comparison to Union and Enbridge, as we know so far, I think when we got the numbers earlier, were a little bit under.
That's correct. So in our supply program, we will be less than Union Gas up until at least March of 2017 with our current rates. In our transportation rates, we are currently less than Union Gas up until January.
Okay. And in terms of the cap and trade, we happen to own our gas utility, but has there been any indication from the private gas utilities that they're going to subsidize the province and take a hit on their profit in order to keep rates lower for the residents?
I've not seen anything like that.
Okay, thank you. Okay, so second round, Councillor Gazzola.
Can you tell me how you calculated the average consumption of 2,100 cubic meters?
Certainly. So through the chair, that 2,100 average for residential customers is the average billed residential consumption divided by the average number of customers.
The reason I asked for some information over the past week while I was away, and you did provide me with a lot of good information. Now the information you provided was the total consumption is about 273 million cubic meters, but of that 181 million is M1 customers. If you divide that by your 70,000 customers, that comes up to closer average consumption of 2,600 cubic meters. The only reason I mention this, and it's, there's no one's done anything wrong, but the impact becomes even greater than 10% on our customers.
So through the chair, we rechecked that number, and based on 2015 residential billed consumption, we are looking at around 2,100 cubic meters. So We don't look at this number annually. It's an average because of the growth and reduction of customers over time. So what we found in the past is that 2100 is the best reflection we have of the average customer base and the average consumption after removing outliers.
Yeah, except that 2015 was a light year. So, okay, I just want to point that out, that this 10% increase can be even worse than that. And incidentally, I went through the calculation, and as far as the city's part of it, there is a slight reduction, almost 0.5% or something, on the city part of the bill. This is based on your figures. So, I'll just make a quick comment. I won't move I'll leave moving the recommendation to someone else because I'm not going to support the recommendation. When I talk about the need for council to look at that, there's been a lot of information thrown out this morning, 2 million this, without really any research or any factual information. I know that they are estimates, but we need to look at that. They've just been thrown out at the last minute, and how do you make a decision on that? And this whole issue of cross-subsidization, it doesn't always mean that taxes have to be raised. We get a dividend from our utility, so we can reduce our dividend, as was pointed out, without even talking about cross-subsidization. Yes, it might mean that we have fewer tax dollars. It might mean that perhaps we can create efficiencies that make up for these things. Okay? And yes, it might mean that we might have to postpone or cancel some capital projects. I'm not looking to help the province in this whole issue. I'm not looking at that as subsidizing them. I'm try to help our customers if we can in some way. So. And just one other point on the engagement, that public engagement, that, we used to bill quarterly. There was a time when we billed quarterly. And that's our choice. We can do whatever we want there. Okay, now I think we really need to look at where we, and I asked the question, where do we stand as far as what are we committed to for the next 5 years? The reason I asked that, at the end of March, we had close to a $3 million surplus in our supply account. And currently we're going to go to a 9.5 cent supply cost, and if you looked at those market rates, the market rates are now around 8 cents or something. So is it possible to cut a penny there or half a penny? Is it possible to do a little bit without even talking about cross-subsidization? That doesn't enter into it. And is it possible to do a little bit to help our customers? It's because we have the advantage that we own this, and over the years, we've helped our customers in a lot of different ways. There was a time that the Kitchener Utilities did free servicing in every summer for all of its customers, and that's since been taken away, understandably so. So I will stop blabbering there. I won't support the recommendation that's coming forward, and I have prepared an example of a note that I would like to see that would fit very nicely on our tax bills. So if I can put that, I will move that as an amendment.
As an amendment? Okay, thank you. If you could get that up in the overhead, that would be great. And I will take that as your comment portion of this item as well. I'm going to go to Councillor Schneider, who hasn't asked any questions yet, and then after that, though, we're behind time here, I'd like to get a motion on the floor. Councillor Schneider.
Thank you, Chair Davey. Just a question for staff. Our rates, you said, factor in volatility in weather and market. I'm just wondering if there's an example of how that has benefited our customers in the past.
Well, that's true, Chair. That's being benefited to our customers at the moment, because as storage has been high last year, we've had an oversupply in natural gas, which has essentially driven the price of natural gas down. And as such, that's why we would be suggesting a reduction in our rate, because based on our gas purchase policy, council suggested for us to be a little bit more market responsive, and that's what we've done.
Okay, thank you.
Okay, thank you. I have 3 people in the queue, but could I just get a raise of hand? Is someone prepared to move? Okay, the recommendation has been moved by Councillor Singh, and did you want to move the stabilization fund item as well? Do you think it should be done separately? Okay, we'll deal with it afterwards then. And so does anyone have any questions left, or is it just comments? Question, Councillor Fernandez.
Do we have I know that we're setting a minimum standard for the reserve funds. Do we have a sense of what that reserve fund could be sitting at in a year's time?
Mr. Chapman?
For the cap and trade, sorry.
For cap and trade, we have a projection. I would suggest to you it's pure conjecture at this point until we get through the auction. What we're showing is that we would have a balance of around $600,000, declining to $400,000, and then do $43,000 by the end of our compliance period. So the key will be we have to purchase these credits over a 3-year period. We'll have to set a rate each year for the 3-year time frame, and at the end of that 3 years, we'll need to have covered our costs. So at this point in time, I would not put a lot of confidence in this number. I think the risk you face is that small surplus could actually be quite a large deficit if that auction price goes above the minimum that we're forecasting.
Okay. So my understanding is we have a 3-year compliance period. Help me understand what that means when you say a 3-year compliance period. Does that mean that's the amount of time that we have to make sure that we get the money from our customers, or what does exactly that mean?
So through the chair, the initial compliance period is actually 4 years.
Oh, sorry. Okay.
And then it will go down subsequently to 3-year compliance periods. So what that essentially means is we have 4 years in order to acquire the amount of allowances to offset 4 years of consumption or emissions. It basically makes the difference so that we don't have to true up annually. We can take up to 4 years to acquire these allowances.
Okay. I guess my challenge here and my struggle here is if we have up to 4 years to buy the allowances, and taking into consideration that we will be heading into an election in about 18 months, everything can change. What will happen if everything stops with the whole cap and trade program through the next election? I mean, this is just trajectory. This is just, I'm making all kinds of assumptions here. But if we are also sitting in sort of an ambiguous situation, maybe we should also be looking at what would happen if that whole cap and trade program stopped. What would we be doing with the money that we have taken from our customers?
Ms. Fletcher? I mean, that's a bit of a political question, but Ms. Fletcher.
Well, I know.
Through the chair, I think we've been clear in our report that this is virtually a pass-through. So it is also one of the reasons why staff do recommend treating this program as a self-contained program, so that a year from now, 2 years from now, 4 years from now, we can definitely separate out the finances of this program from the finances of Kitchener Utilities business and the City of Kitchener's business.
Okay, I understand that, but my question still remains. In that time we will have accumulated. I know it's a flow through, but then we're setting aside a reserve. What's going to happen as that reserve grows if all of a sudden everything changes with the cap and trade?
I presume it would be returned through rates, but Mr. Chapman?
Through the chair, so I would suggest that there likely will not be much of a reserve here, but to the extent there was, and it was not required, it would be returned to the ratepayer.
Okay. And my last question is, we were talking about reducing the dividends, and there's an assumption that it's $1 million, and we would have to. I was a little bit puzzled by your response, Mr. Chapman, when you said it would affect our recreation and our. Sorry, fill me in with the other.
Mr. Chapman?
Yeah, I'll just reiterate it. The dividend currently is around $14 million, and it's fairly evenly split between the capital program and the tax-supported operating budget. So reducing that dividend would have an impact on either or both. Within the capital program, that's a part of our capital pool, CC items in the capital forecast. The majority of that funding goes towards soft services, predominantly recreation and culture. So if you were to draw that funding down, that's likely where the impact would be felt within the capital program.
Okay, but $1 million over an entire year would, I don't think that's going to negate an entire project, would it not? Would it? I mean, give me an example of a project that would negate completely.
That would be a substantial hit on the capital program. I'd have to go back and take a look at it, but if memory serves, I think the total capital pool is only around $20 million a year. So even $1 million would be a 5% hit on that capital program, which could be substantial.
Okay, thanks.
Okay, Councillor Singh, question or comment? Okay.
But I can make my comment afterwards if that's okay.
If
everyone else is ready to make comments.
We're running way behind time here, so
yeah,
we can
I'll try to be very quick with my question. It's related to the reserve. Surprised with Mr. Chapman's response that the reserve probably wouldn't have that much of a balance. So because we have 3 years to really save up on, or accumulate the monies required to purchase, I guess, for the cap and trade purpose, why would there not be substantial monies in there if you're increasing the typical bill by 10%? It's not just a 5% component of it. Wouldn't all of it be in a reserve? And at the end of 3 years, we would be required to make that payment? If can get that clarification.
Through the chair, no. It's because we would be buying credits on an annual basis. So for the most part, what we raise in a year will be going to purchase credits in that year.
Okay.
Our plan in the detail is actually that we would ramp that up over time. So we will likely not buy a full year's worth of credits in year one until we understand how the program better operates. But I would suggest it would be a substantial risk to defer the purchase of all of our credits until year 3 or 4 of the compliance period, because as there are fewer credits in the marketplace, the likelihood is that the cost of those credits will go up.
And are we required to buy at the beginning of the year, or could we buy at the end of the year?
So in 2017, there will be 4 auctions quarterly that we'll be able to buy from.
4 auctions quarterly?
One auction quarterly, 4 times a year.
But you didn't answer my question. Are we required to buy at the beginning of the year, or could we buy at the end of 2017?
There is no restriction.
So
if there's no restriction, could we buy at the end of 2018? Or it has to be annually, though, right?
No.
No, it's quarterly. There's an auction 4 times a year, so quarterly. You get a chance 4 times.
Yeah, I know what chance means. We get a chance to buy 4 times a year, but I'm saying, could we negate that chance and say, no, we're going to buy on the last quarter of that year, so the end of 2017?
Yes.
And the answer I was getting from Mr. Prasad, that we are not obligated to buy within that quarter. We can, in fact, buy at the end of that year.
The answer was we don't have to buy anything next year, but there's a risk in that.
So we could wait. I realize that. We could wait till the end of 2017 and at that point have more details on the program as well, so that we're not just passing the money on to the province, where if we're overestimating what the cost may be, we probably wouldn't end up getting the money back, as opposed to waiting till the end of the year, having more clarity. Could that be an option?
While that is feasible, it puts us at a riskier position.
Rate shock risk. I've heard that before. Is that something that could be discussed later on? Doesn't have to be decided at this point?
Certainly. Next year, we plan to come back to council with updates on the cap and trade program, and the first auction will be held in March, so we'll have a better strategy by then.
I think that comprehension is helpful for us to plan for next year, and that's for a later discussion. Can I make my comments now? Would that be okay?
Please, yes. In just time.
Thank you. So quickly, this is, as I said this before, this is a good news story. We are not increasing the rates to our ratepayers for our gas utility. We're trying to minimize and mitigate those costs as much as possible, and we're doing it responsibly. The increase is at 10%. I agree with the motion put before us. We need to do whatever we can to ensure that our ratepayers realize that this increase, the 10% increase, is not our doing, but again, it's being put on upon us and managed or being given to the province on forward. What we need to be very careful is what we do say, though, because again, a lot of our residents put a lot of faith in their elected officials, and what we say sometimes eschews the interpretation of what we do here. And saying that if we were to subsidize through a tax base or reduce the dividend from the gas utility to capital and our operating capital as well, that it may not make a change. No, it will absolutely make a change. We don't plan on the whim for budgeting. These forecasts are based on a 10-year. We know what projects are coming up. We know where that money is necessary, and that's already been built into our budgets. Any decrease on the dividend will have an immediate effect, will absolutely definitely have that effect. So it's reducing on one side and increasing on the other. Though it may be political, and saying yes, we're standing up for the ratepayer, and we're going to try to reduce the dividend, but then a couple of months afterwards, look for ways either reduce services, which is not responsible, which is not right for our citizens, or increasing taxes to subsidize that decrease to the utility dividend, and that's not responsible either. I think we need to be clear with our messaging and responsible with what we say, that this is, again, a pass-through to the province. It's not what we wanted. It's not necessarily what we would like to be doing. But again, it's not our decision. It's something that we're required to do, and it's something that our citizens and our that can properly advocate with their provincial representatives as well in seeing how this program should be managed, or perhaps changed, or gotten rid of if there is a change of government, which we can be hopeful. But based on that, we need to be clear with what we're doing. I'm glad that there's no increase to the utility rates on what we're responsible for, and I'm glad that we're going to make extra effort to communicate that extra 10% is the pass-through to the province, and not what the utility is charging as it's our normal day-to-day operations.
Thank you. Councillor Hernandez.
Thank you, Chair Davey. I will support the recommendation, and I will support the amendment as well, because I think it is responsible for us to have that on our bill, at least to have our taxpayers know that 10% of their bill is being attributed to the cap and trade. But more importantly, Councillor Singh has mentioned a lot of the points that I would like to make, but the reality is, this is going to be a cost A, and cost A is coming to us. We have to find a way to do this. One is to either reduce our capital projects or raise taxes, or we pass it along to our customers. And I think that's what we're doing, is we're passing along to our customers. And regardless, doing it any other way in any form of reduction is, I think it would be rather not physically responsible, and I think it would be a big mistake. In particular, we were just here like 2 weeks ago and raking our staff over why didn't we have capital reserves for City Hall and everything else, and here we are. We might have to reduce these to subsidize a reduction in rates. So I think it's a little, we talk one way and then we talk another way for another instance, and I think we're sending the wrong message here. And bottom line here is, this is no fault of ours. It's something that is passed on, and then we just have to do it in a responsible fashion.
Councillor Gazzola, I have you in the queue, but you've commented twice, or you've questioned twice and commented. Okay, could you kindly be brief?
Well, I have a question first, okay, and then
okay.
I would like a comment. Yes.
Okay. Yeah, Councillor Gazzola.
My question relates to the reserve portion of this. if there were no regulations from the OEB, and we didn't pass that resolution, what would happen?
Mr. Chapman.
Then the operations of cap and trade would just be subsumed into the overall delivery program.
Right, and
it would bear the risk
and
of
any balances would flow through with the other.
Or shortfalls, yes.
Yes, yeah, okay, and that's so now the fact that the OEB has stated what needs to be done, that whole thing is redundant. We don't need to pass that. The OEB are saying that you have to keep that separate, the same as you do supply.
That's correct.
Yes.
We still look for a council resolution to establish that reserve.
Okay, but we really have no choice.
We have no choice.
Yeah,
I
okay.
agree.
That's why I say it makes it somewhat redundant. Yeah, okay. I just want to make a comment on, because I'm hearing myself being called irresponsible and political and all that. I'm not going to support the recommendation that's before us. I'm asking that we look at possibilities of reducing that. I'm not, in the final analysis, it may not be possible, but let's look. We have the responsibility, I feel, to look at what can be done. If we do that, does it mean we've got to cut X number of dollars from our capital? And if so, here are some of the projects that could be affected. But just to throw out figures and there's going to be 2 million here and 2 million there, and therefore let's move ahead and raise the price. I mean, your Councillor Singh is even looking at the fact that, can we soften this up because we don't need to have as much money left in the reserve and whatnot. So I'm just asking that we look at every avenue. It's a tremendous impact on our customers. So we have a couple of weeks between now and when this resolution passes. Let's look and see. And I'm not, yes, it's $10 million a year you're going to be collecting for cap and trade. I'm not saying you wipe out the 10 million, but what if you could cut down by a couple of million? And do that to help our customers. They're our customers. And by helping them, yes, maybe our dividend is a little bit less. Maybe we have to become more efficient in some areas. Maybe we take a closer look at that supply component of it. That's a big component of it that we have to collect and pass on. But if we can be a little more efficient, a little smarter there, we can save a few dollars for our. I'm just saying we need to look at those before we poo-poo it and call us irresponsible.
Thank you. Mayor Verbenovich.
Thank you very much, Chair Davey. Despite what we've just heard, much of what I'm hearing today is not unlike some of the other populist kind of direction that we have heard around this horseshoe from time to time before when we deal with this issue of rates. I again want to remind this council that we are here not as politicians dealing with the gas utility. We are here as a board of directors dealing with the gas utility and the fiduciary responsibilities we have to the operation of that utility and, yes, ultimately to our ratepayers. I also want to remind council that there are a portion of ratepayers in Councillor Gazzola's ward, I believe also in Councillor Davies' ward and a couple other areas of the city, that in fact aren't Kitchener Utilities customers. They're customers of other utilities. And so whatever we might end up doing here that's being suggested of reducing rates would not be to the benefit of those other people in those other areas. But at the end of the day, the impact of any additional tax increase that would have to potentially be realized would impact all of those people. So in fact, those people in those areas would get a double hit They wouldn't get a benefit of any decrease on their utility rates, and in fact, they would potentially see an increase in their utilities if we were going to in their taxes, if we were going to replace any rate cut with increases in order to keep our capital plan whole. I will support the recommendation that's before us. I can't support the recommendation that's in front of us. In reality, in 22 years of being on council, I have never seen this council get to the point of actually telling our communications people or our utility people the specific wording that they're to use on a bill. That's not our job. We're here to provide governance and leadership for the utility.
Mayor Rabinovich, point of order has been called. Councillor Gazzola.
I'm not telling communication staff. I put forward a suggested note that could appear that I chiseled up last night at 11:30 at night. It's a suggestion, and I'm not.
Councillor Gazzola, the point's well taken. So this motion, it's not written here, but this is a suggested wording. This is something that approximate what you would like to see, but it's subject to staff's. Okay. Thank you. Mayor Rabinovich.
Okay, well, that's certainly good to hear, but I think my second point that I was going to make on that issue, and most important, is I think we need to be consistent, as we are always with the other utilities, in terms of how we handle this. Because we don't want two sets of messages going out to different ratepayers in different parts of the city. And so I think our folks would need to work with Union Gas, with Consumers Gas, in terms of any messaging, and also make sure that it remains compliant with the OEB. I, for one, am not prepared to sit around this horseshoe and do something that's going to jeopardize our relationship in terms of the operation of that utility. And so, can we look at it? Absolutely, we can look at a message, and I'm fine with that. But I think we also need to keep in mind, and I get that people, around this horseshoe don't like cap and trade, and politics are entering this debate. I don't necessarily like the costs associated with it either. But I think we also need to be clear, this isn't something that's unique to the current government. I mean, I have right in front of me, comments that were made by the Leader of the Opposition with respect to the fact that carbon has to have a price attached to it. And we know that all of the parties have talked about that. So I think we wouldn't be true to ourselves or to our customers if we somehow suggest that this isn't going to exist in some form, because we need to deal with climate change, and it has a cost. And all the parties are going to have their own version of how to deal with that. So with that in mind, I will support the motion that's before us. If the intent of the amendment is to ask staff to look at some communication wording, I can support that, subject to it being consistent with what the other utilities do and the OEB being okay with that. And I would strongly urge members of council to do that so that we don't start putting this utility into risk, which will have implication for generations to come.
Thank you. Councillor Etherington.
Through you, Mr. Chair, I too I'll be supporting the staff recommendation. I entirely sympathise with particularly seniors, low-income people coping with this 10% hike. But I strongly believe that while it looks and sounds appealing to challenge the province on this increase, it would totally ignore the severe consequences of such a cut. And I'm not prepared to suffer those consequences for what I believe to be for the sake of a few headlines. I do support any move to educate our ratepayers about which level of government is responsible for this increase. But looking at this amendment, if we put that on our bills, I would strongly urge that we do some work on the wording, because the average taxpayer would not have a clue what we're talking about with this amendment. It does not mention climate change. and the 0.105537-M3, I mean, give them a break. They don't know what you're talking about. So if we do that, and I would support that message, we've got to reword it.
Councillor Yaneski.
Just like everybody else is not happy with the cap and trade component, and everybody's made their position that we've got to stick to our guns and support this. I'd like to have this recommendation, which is in 4 parts. I'd like the 4th part to be separated as a separate recorded vote, and a recorded vote for the whole recommendation. I am fine with the first 3 recommendations because it was pointed out that basically it'd be revenue neutral, and I'm game with that. I'm also agreeable with the recommendation or suggestion by Councillor Gazzola to examine this further and see what we can do to assist with the taxpayer, the client, customer on the gas utilities, and see what results could result from that investigation. However, with the final portion of the cap and trade motion, we are basically just passing the buck on that the province has imposed on us. I know you don't like it, but you all raise your issues, but you got to take a stand. In fact, since we discussed this back a week ago when that was a topic, I've received communication from some of my taxpayers. In fact, I even got a phone call this morning, 7:30 in the morning, when I'm still asleep, from a person indicating to me to oppose it. So I've received only responses from my taxpayers to go against it, even though the province has dictated it. I'm saying dictated it, to go against it, and I will not be supporting it. I will support the recommendation on the screen there to notify the taxpayer with something similar to what was pointed out by Councillor Gazzola. Maybe it needs to be tweaked a little bit, and I find that staff would probably be able to do that. But unless we take a stand on the cap and trade and tell the province to go and look at it again, and we all do that, not only us as utility, but all utilities throughout Ontario, you're just basically supporting exactly what they want, and yet you're all against it.
Councillor Fernandez.
It's hard to find the correct words, I think, to address this so that when the public reads whatever messaging they're going to read, that they'll be able to understand it, because I myself have not had a full, complete understanding. It's a complex part of our day-to-day life when we talk about purchasing gas and we talk about supply and delivery. And, you know, when I hear things like it's increased because of the some portions have increased because of the weather, and you know, people are probably going to be saying, well, what do you mean? It's been the hottest summer in decades that we can remember. How can that be? We've had a warm September. So all of those basic understandings are probably in contradiction to what we've been trying to explain to them. And I think that's a normal way for people to try and figure out what this all means to them. I think it's very important that this is not about headlines, and this is not about exact wording. This is a suggestion, because it is important, as I think we always hear from our residents, is clear messaging, something that helps them understand what's going on. Many times over the last 6 years that I've sat here, I've suggested putting something right on the face of a bill. Or inserts are fine. I open my bill all the time and it slides down, and then pick it up and you glance at it and you go, oh, yeah. If it's on the face of the bill where you're trying to decipher breaking it down, it's a little bit more in your face. And I think that's really all Councillor Gazzola is asking with this recommendation. It's a suggestion. So, just speaking to climate change, I've been a strong environmental spokesperson for years and years and years, and we do need to address climate change. There's a lot of misconceptions out there. How are we going to address it? Certainly, this is one way that this government is trying to address it. I think the challenge here is at what cost to our ratepayers. And I think it's prudent for us to have a look at where we may be able to soften it. Does it mean that we take a percentage out of our capital projects? Maybe. Certainly, I don't like the idea of a 1% increase to our taxpayers. That's not palatable to me. But I think we just have a look. Let's do that. That's all I think is really what we're asking. We're not saying, no, absolutely, do not. This is what we have to do. Just have a look. And there's nothing wrong with having a second look. If it comes down to in 2 weeks at council, or whenever we're meeting on the 26th, I believe, we decide that, okay, this is all we can do. We really can't make any changes. Fine. It's a bitter pill to swallow, but it's being dictated by another level of government. Okay, we're going to go ahead and do it. But just take a little breath and see if there's a way we can do this to soften the blow to our taxpayers. And that's how I'm going to be voting today.
Okay, with respect, Councillor Griswold, I cannot let you speak again. You've had... Okay, you can...
That was raised.
If it's clarifying your motion, certainly.
Yeah, I want to clarify that my motion, if it is that be included on the face of the tax bills. Okay, it's not a message to be delivered, communicated. It's to be included on the face of the tax bill.
But not necessarily this wording, but this intent.
Yeah, the wording, yeah.
Okay.
But
okay, on the utility bill, yeah. And actually, that's okay. Councillor Galloway-Seelock.
I know that, having just checked my BlackBerry, that we have all received a message that indicates that there is a billing area or a messaging area on the bill, and that staff do plan on using that area to communicate a message, whatever that may be. So, yeah, Mr. Chapman, if you wanted to comment on that further, but we just literally received it like 2 minutes ago. So there's confirmation from staff that we are looking at that. So we can still give the formal direction for staff to put some sort of wording and leave it to them of what that wording may look like. I don't have much more to say other than to come back to the point that we really had our big discussion on the cap and trade a couple weeks ago when we dealt with that. We've given staff direction on how to proceed forward. Today we're really just finalizing it with a rate because we're here to discuss rates today. And the good news really comes down to the fact that we, as the Board of Directors for Kitchener Utilities, are able to give a net zero impact to our customers across the board, and I think, or to our M1, our MU1 customers, whatever the name of that was, and I think that is positive news. I think when we start looking at, because there is an increase due to a separate program that we have zero control over. And we start looking at the fact that we may have to decrease service levels, postpone projects. We've heard that they're recreational projects. And recreation and culture being one of my passions, I can pull off a number of different programs right now in front of you that could be impacted by looking at a rate change. I can tell you that the Dune Pioneer Park Community Center expansions there, the Mill Cortland Community Center, the Williamsburg Community Center, the South District Park, McLennan Park, like these all have projects that are coming up that have money, that likely have CC that connected to it, capital out of current. And if we start taking away funds from that in order to subsidize this, what everyone is terming a carbon tax, which is really what it is, then we're decreasing our service levels in order to subsidize this program. And I think staff have made it very clear we want to run this program that we are being mandated to run separately. And so let's do that. Let's run it separately. And that's where I'm coming from. There's a price. And that was part of my comments a couple weeks ago, is that it's hard to put a price on this environmental initiative that the government's bringing forward. And so I struggle with that, but at the end of the day, I don't think I'm prepared to look at any options to decrease our service levels across Kitchener or increase taxes in order to subsidize this program. Let's run it separately as it's meant to be done. So I will support the recommendations as outlined in the staff report. I have no problem looking at wording to go on to the bill. So I will support that recommendation as well.
Thank you. I will comment that, again, people often say that we run our separate utilities like this. Our gas utility is a great example. People always say you need to run and operate more like the private sector. Well, the reality here is that our private sector comparators are going to have a higher rate as a result of our recommended changes. Union Gas and Enbridge, as I understand, are both going to be higher, whether you include cap and trade or not. Everyone's cap and trade is going up the same. We are actually going to have a lower rate as a result of this. That's the message that the residents, I think, want to hear and need to hear. In terms of subsidizing it further, if you want to reduce a capital program or a service to give people a break, there's a time and a place for that, and it's budget, and you reduce it on the tax levy. And we have an opportunity to do that later, and any member of this committee or council is welcome to bring forward a recommendation to defer a program or cut a service at that time. What we must never do, in my opinion, is subsidize another level of government's increase. Whether it's the regional government and water rate increases, that needs to be passed along because we can't control that and we cannot start controlling that. That's not our responsibility, and it needs to go back to the residents, in my opinion, because if they have a problem with it, they need to speak to the level of government responsible. I already made my comments on cap and trade, and with respect to home heating, I'm not going to go there, but I want to reiterate the fact that this report simply and very clearly does not change rates from Kitchener Utilities' vantage, and as a result, our rates will be lower than Union and Enbridge, and I think that's the best possible outcome. So I will be supporting it. I will also support the amendment now that we've had the confirmation in email that this can be printed on the bill, and I'm not sure there's going to be enough room for that amount of text, but I leave it to staff to figure out the wording. I think it's a good amendment. As much transparency as we can get on this without drawing the ire of the OEB, I think, is appropriate. So with that, recorded vote has been called. It's been moved by Councillor Singh, and we're going to take the first three clauses together and then the final. Pardon me? Point of clarification, Mayor Vrbanovich.
So I presume in terms of the wording, though, it's part of it is going to be ensuring that it is okay with the OEB for us to do this?
Could we just get staff's clarification on that now? I think that we could, because my understanding is the OEB has an issue if we break it out and show the per billing per home. I don't think this is a concern, Mr. Prasad.
Through the chair, the OEB has no restriction on bill messaging.
Okay. Thank you.
Okay. So we're good on that then. So we'll take this portion first. So the portion on the screen, again, this is suggested wording for staff to refine. Recorded vote, I believe, is called in everything. So. Yeah, this is the messaging on the screen we're voting on. The amendment first. Okay, that carries unanimously. Okay, we will now take the final paragraph of the recommendation. Those in favor? And opposed? That carries, and the balance of the recommendation. Those in favor? And opposed? That carries as well. Councillor Galloway-Selak has moved the creation of the stabilization fund. We've already examined that issue, so does anyone want to record a vote on that? Am I hearing a recorded vote? No? Okay. Those in favor of the creation of stabilization? Opposed? That carries. Okay. Thank you very much.